Happy lunch hour, guys. Still Wednesday. Third video today. It's 11:15. Busy day. So, in case y'all didn't see this morning, inflation numbers came out, CPI. And this transitory inflation we have just keeps getting worse. Numbers came in this morning at 6.2% year over year for October. That means from what we paid last October to what we paid this October, the inflation numbers, mind you, these are not including food and energy, are up 6.2% year over year. That is the highest we have seen since 1982. I was a sophomore in high school, okay? You want to get into, and again, like I said, this is not including food and energy, okay? You want to include the food and energy prices. Oh, let's take a look at some of this sort of stuff. The food at home index rose 5.4%, okay? Now, so, gee, food's more expensive than that. Meats, poultry, fish, and eggs up 12%. Beef up 20%. Pork up 14%, okay? That's the pork's largest jump since 1990, okay? Food away from home, restaurants, okay? Fast food, sit-down restaurants, whatever it would be. Up 7.1% over the last 12 months, okay? Full service meals up 5.9, so that means your fast food meals are up nearly 10, all right? Energy index, gas, electricity, heating oil, whatever it would be. How about this one? Up 30%, 30.0 in the last 12 months. That's the largest 12-month increase since September of 2005. This is Bidenomics. Okay? This is what they are driving us toward. You know, everything is getting more expensive. We hear this transitory crap and everything, you know, all the BS coming out of Washington. Oh, don't worry, it'll get better. Janet Yellen. Oh yeah, this is gonna keep going on till third or fourth quarter of 2022. That's a freaking year away. Okay, how long do you think people can afford to pay all this stuff? Oh, so of course, what are you gonna hear? Well, but your wages, everything like that, people are making more. Nope. All right. Wages are not rising. This also comes out. Real weekly earnings are down 1.6% year over year. So get this, guys. We are making less money and spending more money astronomically due to Bidenomics. Okay. You know damn well they're going to come out and blame Trump. Kind of hard to do that because we're looking at what? Literally 2 more months of 2020 and Trump wasn't president. Okay? That's it. So of the last 12 months, 10 of them are under Potato Joe's leadership. If you want to use that freaking term. Okay? They are destroying the economy. Everything I talked about this morning, everything I've talked about for months is what is going down now. Now, what does this do to the economy? Obviously, there's what's called in the financial industry a flight to safety. So investors, companies, whatever, are selling investments, like I've told you guys over and over, risk reward, okay? Selling investments that have any risk to them and going to something that is safe, i.e. bonds or precious metals, all right? So you want to know what's going on in the markets today? Oh, gee, I don't know. Gold is up $27 as I'm recording this at almost 1860. Okay, remember we were down in the 1700s last week. All right. Silver is up at 25.14, up almost 4% on the day. We're up over 10% on silver since we bottomed out a couple of weeks ago. Wall Street, corporations, banks, and governments are getting out of risky investments because inflation is what is going to drive down profits for companies, which profits for companies are what the market is based on. Okay, this is what I keep saying. I'm not saying there's a crash coming today or anything of the sort, but it's numbers like this that cause the market to go down, which is what I keep telling everybody. Watch for your retirement plans, watch everything like this. And I know what a lot of you guys say. Oh, but I have to pay the 10% penalty if I take my money out of my IRA or my 401k and use it for something like that. I agree. Okay. The difference is if the market goes down 20%, paying a 10% penalty ain't going to look so bad, first off. Second thing is you don't have to sell out of your 401k or your IRA. You can just move the money into something safer, okay? Money market, for example, is going to be a lot safer than equities. Again, I'm not giving anybody financial advice. I'm just telling you where the smart money, where the big money is going right now. And it's getting out of the equities market. You still have plenty of speculators, in there. Hedge funds, God knows everybody that trades on Robinhood or whatever it is, trying to trade the market, okay? Which, a few get fat and a lot get poor. But this is what you guys got to walk. Inflation ain't going away, guys, not by a long shot. It's getting worse. And, now that we're going into winter and food prices and utility prices goes up, means your disposable income is going to go down. If you make $1,000 a month and your electricity just went up an extra $100, that's $100 you have less to spend on something else. Okay, which means you don't go to Walmart, which means you don't go to McDonald's, you don't go to Target or wherever you shop or anything. So they don't sell as much, so their profits go down, which in turn drags their stock prices down. Okay, that's how it all works. That's why inflation is bad for the market and why you are seeing people get out of equities, stocks, mutual funds, and go into something that's got a relative stable value, i.e. bonds, i.e. precious metals, whatever it would be, which of course drives those up a little bit. You don't see the volatility. They're not going, gee, let me bail out and go into Bitcoin. Yeah, some people are. Bitcoin's up today. Go figure. All right. But that's what's going on with these numbers. And I don't want to get all wonky on everybody again, but I think a lot of you guys seem to appreciate when I'm telling you how the economic picture is playing out so you can plan accordingly. That's kind of what I wanted to tell you here. So inflation is going up. Watch your money. Hopefully that's it for the day, unless anything else comes up. See y'all later. Pinball out.